This is our second video on IRS audits of ERC claims. The ERC stands for the Employer Retention Credit. And here's some statistics that might be helpful to understand if your claim, why it is under investigation or why maybe it has been suspended and hasn't been processed yet. The IRS received more than 1 million ERC claims, which represent about $86 billion of payroll tax credits or refunds back to companies. Of those, 28,000 applications have already been approved, which represent about $2.2 billion in refunds. And there's 14,000 that were flagged as improper, and that's about $1 billion of improper refunds. And the IRS is going through the rest of those applications, but that's, 1 million applications is going to take some time for the government to review. And these are fairly complicated and technical applications and a lot of requirements, especially some of the definitions. If you look at our video, the first video, some of the definitions have changed. So what this means, if you have filed your ERC credit, your application, and you haven't received a response yet, please go back to our first video and look at some of the definitions to make sure you qualify, because if you do get flagged for an audit, you're going to really want to provide the evidence to show that your business was either partially or fully closed during COVID, that you were affected, either you had a revenue reduction in a specific quarter from 19 to went down in 20 or 21, and whether you qualify as a qualified employer. Here's some additional information of concerns that the IRS had relating to the claims that they have already investigated. And by the way, the IRS has already opened up about 450 criminal investigations that's worth about $7 billion in illicit refunds that will potentially either have been paid or will be paid. But here's some things the IRS has addressed, and it's on their website. You can look at them. So here's some of the warning signs. First, an essential business that could fully operate during COVID and didn't have a decline in gross revenue. So an essential business, that's basically a legal term. And during COVID, if you were an essential business, certain governments of certain states allowed you to continue to operate, like for instance, construction or the medical field. You were deemed to be an essential business. And that might go against your ERC claim, because if you're an essential business, you might not have suffered a partial or full closure during COVID. And the IRS is definitely going to want proof that you were closed. And there's different ways and different evidence you can provide to the IRS. The second is a business that's unable to show how the government order suspended more than a nominal portion of the business. So even if you were suspended, you have to have some proof of how that affected you. For instance, if you are a trade show business and you do audio-visual, you rent that equipment out for different trade shows. Well, trade shows were pretty much closed in 2020 and part of 2021. So you could show canceled contracts. You could show that the venues where the trade shows normally occur have nothing on the calendar. Everything got canceled. There's multiple evidence that you can show, but you're definitely going to want to provide some evidence to the government if you are identified or flagged for an audit, for an ERC audit. The third is reporting family member wages as qualified wages, and we covered that in our first video. But anyone who's related to a majority owner, those wages should be excluded from the ERC calculation. Now, if you hired a company to prepare these ERC claims, you're going to want to go back to them and talk to them and ask them for the data. What employees were included and how much of their wages were included in the ERC calculation. The fourth issue that IRS has identified is using wages that are already used to calculate the PPP loan forgiveness or the shuttered venue grants, or there was a couple different grants for restaurants and venues. Any wages that were used, for instance, for the SBA, any wages that were used to calculate the SBA PPP loan that you either have applied for forgiveness or received forgiveness would be excluded from the ERC calculation. So you got to look at your gross wages for 2019 or 2020, depending upon whether you had a PPP1 or PPP2 loan, and look at the wages and what percentage of total wages were used to calculate the PPP loan and the forgiveness. And if 100% of the wages were used to get the PPP loan, you may not qualify for the ERC credit. The government doesn't want to have you double dip. In other words, they don't want to give you a loan to pay the wages because you were affected by COVID and then take that money and then also apply a second time based on the same wages to get a refund on taxes that you potentially didn't pay because you did get a loan that was forgiven by SBA. And the fifth thing that IRS has identified is claiming too many quarters. So although you might qualify for one or more quarters in a given year in 2020 or 2021, but you may not qualify for all the quarters. You got to look at the requirements that IRS has, and if you're basing it upon a partial or full suspension of business where you truly closed the entire year for 2020 and where you truly closed for the majority or more of 2021, and if you weren't affected by a government order, for instance, in 2021, and you can't satisfy the second potential option of having a 50% reduction in gross receipts for 2020 or 20% reduction in 2021, the moment your income starts to go up or your gross receipt starts to go up for a particular quarter and you no longer qualify for that 50 or that 20% based on the year, you may not qualify for the ERC for that quarter. So there might be certain quarters that you can show that you qualify, but it may not be all the quarters. So go look back, check quarter by quarter. Number 6 is the government orders that do not qualify. For instance, some businesses chose to suspend their business voluntarily. So if you have a business that you voluntarily chose to close down and there wasn't a government order requiring you to close down, that might be an issue. The other thing is the IRS has identified issues with wages that are not subject to FICA, which is Medicare and Social Security. You want to make sure that Medicare and Social Security taxes were withheld in the wages that you paid to your employees, and that was paid to the government, because they're not going to give you a refund of some of those taxes if the taxes weren't paid in. Number 7, if there was a supply chain disruption and you claim that was why your business was fully or partially suspended, some of the supply chains may not qualify. You really have to show that it was a majority of the business, or not a majority, but a good part of your business was affected by a primary material that you couldn't get from a supplier. Number 8 is if you included too many tax periods, and we kind of already talked about that some companies can only claim an ERC for wages paid during the suspension period and not the entire quarter, maybe not even the entire quarter. But you really got to have some evidence as to what start and end period, and there might be more than one, by the way, that your business was partially or fully closed down. The 9th one is that the businesses did not pay wages and did not exist during the eligibility period. And this is more of a fraud issue, really. If you have a business and you didn't pay any payroll and you claim the ERC credit, or you filed a payroll return and didn't make a payment and then requested a refund, or your business just didn't exist and these are just fraudulent records, that's definitely going to be an issue. Another thing to keep note of is that the IRS does have a voluntary compliance program. There's a VCI1 and a VCI2, so voluntary compliance 1 and 2. Number 1's already closed. Number 2, which will close on November 24th, 2024, this year, only covers the 2021 ERC credits, the applications for 2021. And the things that you have to do to qualify is that you have to give 85% of the refund back. Now, the government's assuming that you paid 15% to the company that helped you obtain the ERC credits. A lot of companies hired bookkeepers or companies that were ERC companies. And so being smart about it, they said just return the part that you got, which is 85%. They don't know exactly how much you paid in, but you have to return 85% of those funds back. That was the first requirement. The other one is that you actually have to submit an application and include some facts, so you have to be truthful. That application is going to be signed under penalty of perjury, so it's very important that it's accurate. And that you have to cooperate with any other requests that the IRS has. And that might be a request from the IRS to provide more information about the company that you hired, who may not have done an accurate job, and they may have other taxpayers that they did the same poor workmanship on and didn't provide accurate information to the government. So they're going to ask for your cooperation on potentially future investigations. And the last is that you have to sign a closing agreement. And the closing agreement is basically an agreement, almost like a settlement agreement between you and the government, that states the facts, states how much credit you received and how much you're going to be refunded back. And that, again, is signed under penalty of perjury. So you're going to want to make sure you either have an attorney or somebody qualified to go through this process with you. It is very technical. There are some legal ramifications and potential criminal ones if your application was grossly inaccurate. So hope this information was useful. I'm John Milikowsky, founder of Milikowsky Tax Law.